All right, we're in the beginning of the fourth quarter, which means now we're gonna look back at the trends of the third quarter, and I'm gonna do my best to make it obvious why interest rates keep on rising. I'm Christopher McGee. I'm the owner of Halcyon Real Estate. Halcyon Real Estate is affiliated with the Keller Williams Market Center in Salt Lake City, Utah. Today is the 2nd of October 2023, and this is the numbers and the nuance. Every week you come here to know what the right now market looks like in Utah. So just a quick reminder before we dive into the numbers of this last week and the entirety of the last quarter, just remember, if you want any more detail on what all these numbers mean that I'm going over, you can look at my numbers, my real estate numbers explained video flag at the top right of your screen now. You can get solid on all that. Right now, let's look at the numbers. All right, our inventory as of the moment I looked at it this morning is at 9,339, which is down from the previous week. And all these graphs we're looking at today will be graphs where the data points start from the beginning of the third quarter. So we can see that the trend of inventory throughout the third quarter was for inventory to be coming up. Average days on market, the average number of days it took for a property once it hit the market to accept an offer and go under contract. That was 50 as of last week. So that's a raise from the week previously, and we can definitely see that this number rose throughout the third quarter as well. We went from just below 40, hovered around 40 for a moment, and then it started to come up, and now we're all the way up to 50. Average list price this prior week came to $729,274. That is up from the previous week, and we can see that this definitely trended up throughout the third quarter. I'm going to talk about that a bit in the nuance part of our video today. Now, average sold price last week came to $740,495, which means this week something happened that hasn't happened all year yet, and that is that the difference between average list price and average sold price was in the positive. It was in the positive to the tune of $11,221. It's in the seller's favor. We can see that's obviously up from the previous week. We can also see that if that particular data point didn't exist on this last week, this trend wouldn't have come slowly up and to the right. It probably would have stayed even or perhaps come slowly down and to the right. Homes sold in the prior week came to 561. That was up from the previous week, and we can see that this has trended slightly down. The number of properties currently under contract comes to 4,497. That is down from the previous week. We can see this clearly trending gently down throughout the third quarter. The number of price reductions that happened in the previous week came to 1,020, which was down from the previous week. We can still see this clearly trending up throughout the third quarter. And finally, the number of listing contracts that were either canceled, expired, or withdrawn in this previous week came to 536, which is obviously up from the previous week and as high as we've seen it through this quarter for sure, as high as we've seen it through the last couple of quarters actually. Now, part of the reason it's so high is because this is the first of the month, and whenever we have the first of the month reporting, we see higher numbers here. So this is trending up and to the right, but it would be trending up even without that particularly high number this week, I think. So this number did trend slightly up and to the right throughout the course of the third quarter. All right, so that's the third quarter. The one number that really matters when it comes to the housing market here in Utah or anywhere that I don't give you because it's not on the MLS is what current interest rates are. Now, I can't give you what the current interest rates are for a couple of reasons. One, it's not on the MLS, so I don't have access to that information directly as a realtor. But two, even if I do have access to it, it's a convoluted number. It's a multi-variate analysis, much like understanding the Utah housing market is. I can't just tell you what the interest rate is because the interest rate depends on what your debt to income ratio is, how much down payment you're going to be making on the home you're purchasing. It depends on the size of the loan. It depends on your credit score. It depends on whether you're getting a VA loan or an FHA loan or a conventional loan. It depends on too many things, and so we can't just say, here's your interest rates. But obviously it's an important factor in the housing market, and so if you haven't been following along, you don't know where interest rates are. They're said to be at about 8% right now. In fact, they're at about 20-year highs. And this is making it a lot more difficult for a lot of people to buy homes It's the people it's cutting out, particularly are first-time home buyers. If you have a home that you can sell and take the proceeds of that sale and put it into your next home's down payment, your interest rate is going to be significantly smaller. You'll have a much smaller monthly mortgage payment to make. If you are coming from renting and just whatever you've been able to save up for a down payment, it's a lot more difficult to cough up that kind of money. And so our first-time home buyers are the people who are getting shunted out of being able to buy a home right now. And as we'll see, that isn't quite enough for the Fed to decide to turn interest rates back around. So let's ask the question, why are interest rates continuing to rise? Well, why does the Federal Reserve increase interest rates to begin with? Well, the Fed increases interest rates in order to combat inflation. What is inflation? It's not the Fed arbitrarily devaluing the dollar, which is what a lot of people seem to feel. Inflation is when we, the people, prove consistently over time that we are willing and able to pay for goods and services at increased costs. Well, why are the costs increasing? Well, the costs increase for any number of variables. Do they increase because of corporate greed? Sure, sometimes it depends. Do they increase because of natural disasters that change the economy of the globe? Absolutely. Do they change because of increased tariffs and customs? Yes. Do the costs of goods and services increase because of politics, increased regulations, increased shipping costs? Yes. All those reasons, there's a multitude of reasons for why costs would increase, but the point is, if costs increase and we the people show that we are willing and able to pay for that increase in costs over time, that is inflation. Now the Fed sees this, and in an attempt to combat runaway inflation, it makes borrowing money more expensive so that people borrow and therefore spend less money. Remember that every time you use your credit card, you are borrowing money, and there is an interest rate payment you pay on that. Not to mention the interest rate you pay when you get a car, obviously when you get a home. Remember too that businesses are taking out loans in order to execute on the aims and the needs of the business. And so if it's harder to borrow money, then businesses eventually fail, and society at large will eventually borrow and spend less money. And if we're borrowing and spending less money, then the costs of goods and services flatten out, maybe drop a bit, and then interest rates will come back down. All across America right now, people are showing that they are willing and able to continue to buy homes at increased prices, and Utah is no exception. Look at our home values increase steadily across the course of quarter one, and then they stay pretty steady but rise a little bit across quarter two. You can see the red trend line come up and to the right, but then look at quarter three, the quarter that we just finished. Look at it come up and to the right. So interest rates keep coming up because the Fed is literally trying to get us to a place where fewer people are able to buy homes so that the inflation of home values starts to track down instead of up. Now to be clear, the Fed doesn't necessarily look at the housing market to dictate for itself the moves that it makes. The housing market is one good reflection of what the Fed has been doing in terms of rising and dropping interest rates. But in as much as the housing market is a good reflection of what's happening in the rest of the economy, our most recent economic data is showing us that the dollar is actually getting stronger, that fewer people are making jobless claims, and over the last quarter, that has been a direct cause of the Fed's decision to continue to increase interest rates overall. Meanwhile, how many homes are we selling every week? You can look at how it trended pretty evenly across the second quarter and started to trend down a little bit through this third quarter. And if things happen as we would expect seasonally heading into winter here, the number of homes sold per week would continue to drop through the fourth quarter. And while that won't be the favorite thing of people in my industry, it looks like it would probably be the best thing for the economy overall. The difficult thing is first-time homebuyers, right, are the people who are already being pushed out of this. So how big a bite do we have to take out of the rest of Utahns or people moving into Utah who are trying to buy homes before we see reflected in the housing market what the Fed needs to see in the economy overall? That's a good question. But one way or another, here's hoping these rates come down in quarter four or maybe the first quarter of 2024. All right, it's obviously not everyone's favorite time to move right now, but that doesn't mean that there aren't people who need to move, who need to sell or buy a home. So if you happen to be one of those people or know one of those people who's thinking to move in the next coming months here, feel free to reach out to me. You want to work with somebody who knows the market, who's highly communicative, and who will always put your best interests first. Feel free to reach out to me. My contact info will be in the details. And of course, if you want to stay educated on Utah's housing market from week to week with real-time, straight from the MLS raw data, this is where you want to be. Hit that subscribe button. We'll stay solid on it together from week to week. I'll see you every Monday. Thanks for watching, guys. See you next week.